Welcome to the Skeptic's Guide to Investing with Steve Davenport and Clem Miller. Every 2 weeks, Steve and Clem bring you brief investment insights you may not find anywhere else. We hope you enjoy today's episode. Here are Steve and Clem.
Hello again, this is Steve Davenport coming to you from Skeptic's Guide to Investing. I'm here with my co-host Clem Miller and also a guest today, Dr. James Thorne. And James is a chief strategist at Altus Investing in Canada, and he offers us a perspective on economics that we are sorely lacking on, the science or the sorcery of predicting the future. So I want to start. Today's podcast is about Asia, investing in Asia. What are the risks? What are the opportunities? And how do we take advantage of them? So, James, when I think about your portfolio or portfolios you recommend for clients, how big a part does Asia play? Why? And where do you see the pitfalls in terms of opportunities over the next 2 or 3 years in the Asia markets?
So on a secular structural basis, I think Japan is very interesting because I honestly think that in a world of proxy wars, I think that the agreements that President Biden has made with Japan in terms of the transference of knowledge and the flow of capital going into Japan is really going to set Japan up to counterbalance China in the South China Sea. So that's how I frame it. With respect to China, I sit there and I view the fact that China is entering into what Japan did in the late 1980s and is basically going to start entering into a lost decade because of the extreme levels of debt and their heavily reliance on real estate. But I am both. But then again, and going back to Clem's theme on stock selection, we have to be honest with ourselves and suggest that the skilled labor force in Asia, specifically in Taiwan and South Korea, cannot get replicated in the United States or North America. I'll put it that way. And so, and until proven otherwise, I think, Taiwan is going to be the center of this innovative push into AI and crypto and all of that. So I think on a selective basis, I think there are great companies in Taiwan that you would want to, consider at TSMC. If you want to, in South Korea, you want to go in there and look at Samsung instead of Micron in the United States, okay. But I do really think that the narrative that people are missing is the fact that in a world of proxy wars, where you've got China saddling up beside Russia, I think it's very interesting that, the relationship between the United States and Japan are getting tighter. So I'll push it back to you on that, Steve.
Oh, I like that. We were talking, Clem and I, the other day about how this agreement seems to have gone under the radar with the U.S., Japan, and Australia of a new military alliance. And I think that it's like everything in the media. Some things are significant and others are not. And I look at that and say that's a pretty big statement when you try to look at all the things that are going on in the world. And our focus on Asia is in working with our allies and strengthening that military aspect. I still believe, as you said, as we talked about with Germany in our other podcast, Japan has been pacifist somewhat culturally, but also because it's pretty good financially for them as a country. When they don't spend as much on defense, it allows for more spending in other parts of the economy. So I guess the one issue that I think, or idea that you brought up, is this idea of immigration and how do we transfer capabilities from one country to another. I listened to a podcast yesterday where they talked about the fact that when you look at what's happening, Taiwan Semi and others are figuring out how their machines could be locked down if there were an act of aggression and not utilized by a country who came in and took over. So I think that people are getting ready for a Taiwan event. And I think the idea that if China took over those machinery and couldn't utilize them, and the company could lock down and deny access is a very interesting, an asset can be in a country, but if an asset can't be utilized, is it really an asset? So, Clem, what do you think is happening in Asia in terms of an opportunity, or is it an avoid versus a hold or a buy?
So, Steve and Jim, I think it's a very nuanced situation. There is one stock in particular that I hold, and that again is Taiwan Semiconductor, TSMC. And I hold that one because it has a virtual monopoly on the GPU type chips, especially those that are more advanced from NVIDIA. NVIDIA contracts all of its production out to TSMC. The risk, however, with TSMC is that of a Chinese invasion. There's a theory that TSMC provides sort of a silicon shield, and that China won't invade Taiwan because TSMC is there. I don't agree with that, but I do think that China will undertake efforts if there is some military action to try to avoid destroying TSMC. Of course, TSMC might decide to deactivate itself per some of the things that you said, but I do invest in TSMC because of this kind of monopoly position that it holds. When you move beyond TSMC, I do like Japan and I do like India. With regard to Japan, I hold an ETF, which is in my personal portfolio. Again, we're not recommending individual stocks or ETFs on this broadcast, but I'm just telling you what I hold in my own portfolio. So I hold a currency hedged Japan ETF. And the reason I hold that rather than individual companies is because I think that it's very difficult for somebody not immersed in Japanese business culture to make these decisions among particular Japanese stocks. So I'm reminded by what Warren Buffett did, kind of modeling myself after that. Warren Buffett went in, like Japan, and then invested equal amounts in all 5 Japanese major trading companies. So I'm sort of doing that in a similar way by investing in this Japan ETF. I'll say 2 more things about
what? How is it weighted?
What Buffett did, it was equal weight.
You did.
Oh, it's the ETF is typical ETF market cap weight. So much more heavily in for example Toyota than in others. But Japan is a fairly diversified economy, so it's not like there's one dominant stock. So just two things I'll note about Japan in terms of the demographic issue. While that's an issue for Japan and Japanese production, Japanese companies have taken major strides with respect to robotics, and also they have done overseas production. So a lot of these Japanese companies produce overseas, and so the fact that the country itself is having demographic issues has less of an effect on the company's profitability per se. Then the last thing I'd say about Japan is that Japan still has a tailwind from the Shinzo Abe Abenomics reforms, and so they're benefiting from that. So I'm very optimistic about Japan. I'm also optimistic about India. I hold the MSCI India ETF, and there again, I hold this because I don't feel like I can distinguish among individual Indian stocks, but I'm very optimistic about India's medium-term and long-term economic prospects. There's a there's a deepening capital market in India, which should be good for stocks in India. And I will say that another reason to hold the ETF is because it's awfully difficult for investors, even institutional investors, to be able to invest in individual Indian stocks. They have a series of legal rules there. Finally, as many listeners of this podcast know, I have a particular bugaboo about China. I hold no China stocks. I invest in stocks in Europe and in the U.S., which have sales in China, but I do not invest in China stocks per se. I believe that there's too much ongoing government intervention into the workings, especially of the internet platform stocks. Too much intervention it's affected their profitability and their ability to generate share price movement, positive share price movement. And also, I find it challenging to be positive about Chinese stocks in the presence of export controls, U.S. export controls, and trade barriers, and general tensions between the U.S. and China. So those are my comments regarding Asia.
I'd like to try to get a little more tangible in this space because I've been looking at, and we've decided not to own Taiwan Semi because we think there is too much China risk. And so in our portfolios at Circa, we're not using Taiwan Semi. And I have felt for a while that there's a lot of saber rattling and there's a lot of indications from China about how they control Taiwan. But in the end, Taiwan keeps operating and the world keeps, turning. And I guess I'd like to know from you two, what's the probability of there being some active aggression from China towards Taiwan? Is it 25%? Is it 50%? Let's say I gave you the next 5 years. Will we have an event? And if so, will it? We know what Taiwan Semi means to the semiconductor market, and we know what the semiconductor market needs to technology. To me, that when that third rail gets touched, there's going to be quite a charge that goes through markets. And can you estimate or dimension what you think the downflow would be from the markets in Canada and the U.S. for an invasion? And what's the probability of an invasion of Taiwan or some type of control of Taiwan from China? James?
Well, theoretically speaking, right, we know that the Chinese feel that it's part of their country, right? I think the other interesting thing is I'm old enough to have met people who grew up in Taiwan that were fluent in Japanese because it was occupied by the Japanese. I'm going to defer to a gentleman named George Friedman, and I'll anchor off of him. And he basically says that, there's not going to be a conflict in the next 5 years. And I tend to agree with that. The way I frame it in my mind is, look, there's so much debt and there's so much that needs to be done domestically within the United States and China, Canada, and Europe to basically deal with the excessive levels of debt that in my world, I frame it is that there's going to be détente for at least 5 years until we get through all of these issues. And so will they use the saber rattling to keep the domestic folks integrated and involved? Will politicians, think about it, Nancy Pelosi flew to Taiwan, right? I mean, will they use this for political maneuvering? Sure. But I just don't see it over the next 5 years, anything substantially happening. And I think if China would attempt to invade Taiwan, I think the Americans have the might to basically repel it. And I just don't think China wants to get into a war with the United States right now. But if it did happen, Steve, it's a major geopolitical event. I mean, it's a major, financial markets around the world would reverberate from something like that. And it's a severe risk, which I just don't think people are willing to take right now.
We'll be right back.
We hope you're enjoying our episodes. If you are, then we'd greatly appreciate your liking, following, and sharing. Help us help others. Now let's get back to the discussion.
Yeah, I like to think of the people are practical and they're not going to, they don't have the money for a war, they won't spend on a war. But history has kind of shown something different. When countries become desperate or when countries feel like they're losing the messaging or losing I think Xi would love to end his career as president and say, I was the one who brought back Hong Kong. I was the one who brought back Taiwan into the mother country. And I think it's as much about ego as it is about finances. So,
Right. And Steve, what I would add with that is, and I go back to Taiwan Semi and the fact that can we replicate over here in North America what they have in Taiwan? And if we can replicate it, then Taiwan ceases to become a strategic asset. If we cannot replicate what's in Taiwan in the United States, then I'd suggest that given where we're going in terms of the digital economy and AI, and I think Clem talked about, how TSMC is at the center, the fulcrum of AI and GPUs. Then I just don't. I think that there will be significant Western support for keeping Taiwan independent.
what do you think, Clem? Is it too?
I agree with everything that Jim said. I would just add what I think is a very key point, which is that, in all of this discussion about Russia and Ukraine being sort of an analogy or a precursor to what might happen with China and Taiwan, there's one point that's missing from that equation, and that is that China and Ukraine have a land border. And Russia and Ukraine have a land border. China and Taiwan have a pretty wide and very choppy, by the way, strait in between them. That's going to make it quite difficult for Chinese forces to attack Taiwan. Also, the landing spots that Chinese forces have on Taiwan are very limited. Saw a map recently which showed that really there are only a few spots, sort of choke points along the Taiwanese western coast where Chinese forces can land, and those are easily defensible. And then also the fact that Taiwan is so mountainous that Taiwanese troops, if necessary, could retreat to the hills and fight what amounts to a guerrilla warfare against Chinese forces should they be able to establish a toehold on the island. So honestly, I think 5 years, I don't think anything's going to happen in 5 years. Could it happen eventually? Sure, if China develops enough forces. But a lot of this also depends on what we were talking about with regard to the Japan-Australia alliance, into which you can throw in the UK. Sometimes you can throw in Canada, and sometimes you can even throw in India. And believe me, there's got to be some kind of cooperation between this group of countries and Taiwan.
Yeah, can I just add one thing, guys? And this goes back to a book I read by a gentleman named Chalmers Johnson. I got hooked on this. You guys know I lived in Annapolis or the DC area, which is where the Naval Academy is. And the question is, why does in downtown Annapolis we have so many great sushi restaurants? And it's because when you become a mid and you graduate, you typically go to Okinawa, right? And so what is Chalmers Johnson talking about with regards to the relationship between the United States and Japan is, and I'm going to put a number out and it's wrong, but there's a significant double-digit number of military naval bases in Okinawa. And I would suggest you look at where that island is relative to the South China Sea. And I've known you guys long enough to know about when China started building the islands right in the middle of the South China Sea. And we've also had long discussions about Kissinger's book about how China doesn't use chess as a game of strategy. They use Go. China doesn't want to be surrounded. So, is China just emulating its traditional defensive measure, right, and doing what they're doing, or have they changed, and are they becoming an offensive military power? That's what the question mark. But what I think people need to understand, or at least where I frame it, is there is a significant presence in the U.S. military on Okinawa, which is not that far away, from Taiwan. So I think for now, I think everything is okay. But, Steve, you ask, is it 10, 15, 20 in my lifetime? Anything's possible in a lifetime. And of course, there are possibilities of political missteps, right?
Yeah.
And to get into messy situations. I just think right now it is too important as a strategic asset for the United States that the safety of Taiwan is ensured for the time being. That's my narrative. I have nothing more than, I have no insight into this, but it's just for me reading books and doing what I do.
Yeah, let's not forget that China also benefits a lot from Taiwan already, because a lot of those TSMC chips are manufactured on behalf of Chinese companies. And there's a lot of other trade between China and Taiwan, like, for example, Apple handsets and other things. So there would be a major, I mean, apart from just, a depletion of military resources on China's part, there would be economic conflict that might affect the Chinese mainland, the Chinese citizenry. And the one thing that, China's not a democracy, but it's not, even though China's not a democracy, it's still responsive to unrest at the popular level in China. And so if you have economic problems, serious economic problems that result from a conflict with Taiwan, that could impact the popularity of the regime. And so, she might know that and anticipate that, and as a result, perhaps not invade Taiwan because of that fear.
Yeah, I would add to me, it's also, I think there's been some great research coming out of the Council of Foreign Relations on this in terms of questioning the term globalization and actually identifying, look, it's not globalization, it's called regionalization. The only economy in the world that really globalization works is the United States, because the United States has ceased to basically fully integrate with Mexico and Canada. But China is integrated fully into, if you look at the trading bloc of Asia as we speak. So, do they move things around to get around, tariffs and whatnot? I don't know. But I think the interesting thing for me is when you parse it that way, and you've got such a respected institution as the CFR coming out and providing clarity to the situation. I think, and this goes back to our comments on Japan. I don't know how much the Japan carry trade has financed the real estate market in China. Like, what are the linkages between, the cheap money and the zero interest rate regime of the BOJ and them financing the real estate market? What are the intricacies? What are the interconnectedness between all of these Asian economies? And suffice to say, I think because of that level of debt being so high, and the fact that, Xi is now in his policies timely to attack at least, the excessive urbanization in China. But I think we've got a period of time of everybody's going to calm down, and we're going to try to work our way out of this debt mess. And that's how I view it. But I do not think that China is as isolated as some politicians make us believe they are.
No, I believe that your points are on in terms of a positive scenario. I I'm a little bit skeptical, so I tend to go towards the possibility for a mistake. And I saw the recent, the assassination in Japan, the assassination recently in Europe. I wonder sometimes whether there's a chance for some event that we're not expecting, which is that black swan type that could cause us to suddenly see a flare up in Asia and China not wanting to look weak, and also having unrest at home. I'm not sure I agree with Clem that unrest at home means that they don't act in Taiwan. I think it's a good distractionary tactic to move the people towards this nationalistic ideal. And I think that we've still got this, leader in North Korea that I don't think anybody has a real eye towards what's going to happen there. I see something, unexpected. North Korea tries to launch something against Japan, and everyone has to react. Everyone has to line up behind their partners. So
yeah, Steve, I'm gonna invoke Zygmunt Brzezinski to
you sure on the table?
I just don't think China. I mean, the thing I find interesting about China is they don't have free capital flows, and they're not free floating the renminbi or the yuan. And so I suggest that I think I hear you, and I think as investors, and if we talk about it, it's what is your strategy if, as and when a flare up, if China does invade Taiwan? I think we all have to have contingencies, and that's what investing in portfolio management is all about. But I just don't think, look, I mean, let's be honest here. The United States needs to finance its debt. And two of the largest purchasers of its debt is Japan and China. Let's just be honest about that. We're in a period of fiscal dominance, just like we were in post-World War II. And so I think after the next 4 years, when the United States has to refinance its debt, and guys, I will come down on, I do not believe this higher for longer facade that we get from central banks. I think Waller is totally misplaced. Let's just look at Target's numbers this morning. Okay, the private sector is buckling, and we have excessive amounts of debt. And oh, by the way, either Japan, Europe, and China purchases the U.S. debt, or we go into debt monetization. So this foray into modern monetary theory by the progressive left in Canada and the United States, and maybe and let's throw Europe in there, to me is over. There is no free lunch. So the way I frame that more specifically is, we get a detente, is we got to refinance this debt, and we can't refinance its debt when the Fed funds rates at 350. We have at a yield curve in the United States, the longest inversion ever and the deepest inversion ever. And guys, 25 basis points is not going to uninvert the yield curve. And so the oxygen to the private sector, even if they cut 50, is not going to get it in. Look there's real estate. I mean, you talk to folks on the ground. I talked to somebody in Philadelphia the other day, right? Construction is gone. There's nothing there. Or let's use it, if we'll go back to our previous employee when our band was back together, right? There's no files getting through senior loan. Like, investing or banking is a volume business, right? You borrow short and you lend long, and it doesn't last when you have an inverted yield curve. So that's where I come down and sit there and go, that's to me the gating factor now, Steve and Clem. But once we get through this and we finance all this paper and everybody's happy and they got another 5 years, then all hell could break loose, right? And that's kind of how I'm framing it.
Yeah, I mean, I love to think that we have our finances, and we're more economic animals than we are political animals. But I'm not sure that history is going to tell us that. I think that when we look at messages and stories, as you talk about, I see the story being that China wants to be number one in the world. They want to be the number one world economy. Their involvement with Iran, their involvement with Russia, their involvement with any country who will, help them build the road is not really going to ultimately drive their decision making. I feel that the China nation wants to unify and wants to have one ideal, and that is that they are, the chosen ones. It's amazing to me how similar they are to Japan in this idea. They don't immigrate, they don't allow immigration, they don't have a feeling that they need other cultures to be a strong country. And I think that's their biggest weakness, because they don't take the inputs that could come from other countries and people coming to their and making their country stronger. The United States does. And in all of its immigration mistakes, it's still more open, and it's still been a key part of why we're so dynamic and why our growth rate has continued to maintain, while other countries with a more closed economy will not. I believe you're right, James, that we need to deal with the debt. I'm just a little bit less sure of our political will, and I'm a little less skeptical on the ability of our leaders to do that.
Right.
So,
But in a presidential, from afar, sitting here on Lake Ontario, looking into the States, I love it, because it's like I'm at a party back in college, sitting at the side watching it all go down, right? And what I would say to you that I find in a presidential election year, that I think the nuance that is so impressive about what's going on in DC. I mean, there's a lot of problems, but irrespective of whether you like Mr. Biden or Mr. Trump, and let's leave them aside, one of the things that has happened is that there is a unified industrial policy to focus on China and to focus on making sure that the United States is unified, irrespective of the political party, towards China. I think the Biden administration engaging in the Japan is just an additional layer that really started. I can't remember if it was you or Clem talked about, the Abe and the arrows, right? I mean, we worked together when that all came down. Japan is still using a constitution that was written by MacArthur after World War II, right? So, hey, let's make, if we're going to play a world of proxy wars, let's make Japan an offensive military power and let them basically patrol the South China Sea. China has a long memory about the wars that it has fought with Japan, right? And so I think it's going to be so guys, I am very bullish on risk assets up until the end of this decade, right? And then and you can see the underlying is the gating factor is we all have to refinance the debt at lower rates. We all have the same problem. Once that happens, I think the 2030s are going to be really, 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 really interesting. That's my 2 cents.
that's nice. I like interesting. Clem, do you feel, let's wrap it up here. How do you feel about Asia, and what would have to change to make it more attractive to you in terms of having more faith in the company's ability to execute in an environment where China is being, if we were to start to see a relaxation of some of the tariffs, or what is it going to take for you to become bullish on China?
Hard to see at this point, but I would say that you would need an ideological sea change in how the Chinese government and specifically the CCP, Chinese Communist Party, views its role vis-a-vis companies in China. There'd have to be a tremendous sea change in terms of how they look at things like data, how they look at things like control over information, how they look at what companies can do in terms of their ability to work overseas, the ability of foreign companies to work unfettered in China. We don't have any of that It's a very, very ideologically infused system that impacts investments and returns on investments, and you've seen that over the last 3 years in China. And in fact, Steve and Jim, when you look at if you look at the returns on the Chinese market, reflected by a market cap weighted stock index that is an ETF. If you look at the returns on China over the last 10 years, essentially, especially over the last 5 years, over the last 10 years, it's flat. You wouldn't have made any money in China. Over the last 5 years, you would have lost money. Compare that to the rest of the world, where you would have made a lot of money. I mean, I have no faith right now in the ability to make more money in China, or even to make the same amount of money in China as you would in other parts of the world, including, by the way, Europe. I think Europe offers better opportunities right now than China does. So I think there would have to be a major change in the ideological perspective that the Chinese government takes towards their companies.
James, are we missing anything in the Asia region that we should be thinking of that we're probably not, because we are overwhelmed by the China's presence in all these areas? Or is buying exposure to U.S. companies who have some demand coming from Asia enough for investors to get the exposure they need?
Oh, I think long-term, Clem's absolutely right, but I just don't think we should discount the fact that traders and hedge funds wouldn't gun the K-Web, right? Which is the China Internet ETF, and to try to sustain, get returns. I mean, think about it, guys. I mean, the S&P is about 5,400, about to hit 5,400. Wilson, a perma bear, is basically just thrown in the towel. We have yet to get to the FOMO stage, right? And as well as I do, fundamentals from our perspective, our shared perspective, fundamentals only go so far until you're underperforming your benchmark and you've got to generate performance. So long term, I am completely in agreement with what Clem's saying about China. But short term, could the K-Web, go up 100% short term? I'm not saying, could it go just like same thing what happened in Japan? Right. After in the 90s, you had these massive rallies in the Nikkei, and then it went back down. But for the long term, I think China is uninvestable for all the reasons that Clem talked about.
All right. That seems like a good spot to end it. I appreciate what you guys have been doing today, and I really like the insights. I think they help investors, and I think they help people understand when we're talking about what are the risks and what are the opportunities. So thanks, Dr. Thorne. Thanks, Clem. And we look forward to providing more podcasts here at Skeptics that are going to help you to realize your investment IQ. So thanks a lot, people, and look forward to next time. Thanks.
The views shared on this podcast represent the personal investment views of the hosts. They are for educational purposes and not meant to be taken as investment advice. Listeners should consult their own investment, legal, and tax advisors. Past performance of any investments is not a guarantee for future return.